Silicon Valley giants, innovative startups. Tech companies are dominating headlines and portfolios. But with so much rapid growth, we have to ask, are tech stocks the next big bubble, or are we witnessing sustainable growth? To answer that, we first need to rewind a bit. The late 1990s and early 2000s marked a pivotal period in the business landscape, characterized by the meteoric rise of subsequent catastrophic collapse of the dot-com bubble. This era was defined by the exuberant enthusiasm surrounding technology stocks, with prices soaring to unprecedented heights despite many companies having minimal or even negative profits. Companies like Pets.com or Webvan are emblematic of this phenomenon, experiencing staggering stock price surges fueled by speculative fervor before ultimately succumbing to the unsustainable nature of their business models. These instances underscore the unchecked optimism and speculative mania that had taken hold of the market during that time. However, drawing a sharp contrast to the dot-com era, the contemporary tech landscape boasts a distinctive profile. Present-day tech giants have emerged as pillars of stability, characterized by a profound shift from the speculative excesses of the past. Unlike their predecessors, these modern titans, such as Apple, Amazon, and Google, now consolidated under Alphabet Incorporated, have solidified their positions through substantial profitability, diverse revenue streams, and remarkable innovation. Their influence spans the breadth of modern existence, from the proliferation of smartphones that have become an extension of our lives to the ubiquity of e-commerce platforms that have reshaped consumer behavior. Additionally, their ventures into cloud computing, artificial intelligence, and autonomous technologies underscore their role as pioneers of transformative change. These distinctions highlight a pivotal evolution in the tech sector's dynamics and underscore its integral role in shaping the modern world. This evolution showcases how the lessons from the dot-com era have contributed to the maturation and resilience of today's tech giants, forging a new narrative rooted in sustainable growth and tangible impact on industries, economies, and societies at large. Let's delve deeper into the factors fueling the surge in tech stocks. The current upward trajectory can be attributed to a twofold catalyst. Firstly, the omnipresence of technology in our daily lives has played a monumental role. Just consider the unprecedented impact of smartphones. These compact devices have redefined communication, entertainment, and information access, reshaping entire industries in their wake. Furthermore, the advent of cloud computing has introduced a new dimension to tech innovation. Services like Amazon Web Services and Microsoft Azure has revolutionized data storage, processing, and scalability, transforming how businesses operate and scale their services. Secondly, the COVID-19 pandemic served as an accelerator, rapidly propelling ongoing digital trends to the forefront. With global lockdowns and remote work mandates, e-commerce underwent a seismic shift. This shift benefited tech giants like Amazon and Shopify, who experienced unprecedented growth as people turned to online platforms for shopping and services. Remote work became the norm, bolstering the demand for collaboration tools and cloud-based services, further entrenching the role of tech companies in facilitating this new way of working. The synergy between the widespread integration of technology and the pandemic-driven shift towards digitalization has created a uniquely favorable environment for tech stocks to flourish. This convergence has not only catapulted these companies to prominence, but has also solidified their relevance as engines driving transformative change in various sectors. However, amidst this remarkable ascent, the emergence of skepticism becomes inevitable. Critics contend that the soaring valuations of tech stocks might be riding on a wave of speculation rather than being firmly grounded in underlying fundamentals. This debate echoes historical patterns, wherein instances of asset detachment from their intrinsic worth have often led to inevitable corrections. The dot-com bubble of the late 1990s serves as a poignant example, where companies with astronomical valuations saw their fortunes crumble as their lack of profits became evident. Economists and analysts emphasize that history serves as a sobering reminder, highlighting the potential consequences when market exuberance outpaces rational valuation metrics. raising concerns about the sustainability of the tech stock surge in the long run. Despite the differences in context, parallels are drawn to previous market frenzies, such as the Dutch tulip mania of the 17th century, reinforcing the notion that speculative bubbles tend to burst, leading to significant financial repercussions and reshaping market dynamics. Nevertheless, amidst the ongoing debate, a substantial contingent of experts staunchly upholds the perspective of sustainable growth. Within this outlook, advocates posit that the current trajectory merely graces the surface of the vast landscape of technological innovations that lie ahead. For instance, companies like Tesla are not merely automakers, but pioneers in electric and autonomous vehicles, revolutionizing transportation. The evolution of electric vehicles is expected to reshape the automotive industry and mitigate environmental concerns. Moreover, consider the strides in healthcare, where companies are leveraging technology to drive impactful changes. From AI-powered diagnostic tools that can identify diseases from medical images with remarkable accuracy to the customization of treatment plans, the potential for tech-driven healthcare transformations is immense. These examples exemplify how tech enterprises have transcended their previous confines as mere creators of websites and applications, metamorphosing into trailblazers at the forefront of groundbreaking advancements spanning artificial intelligence, healthcare, transportation, and beyond. This visionary shift signifies more than a transient trend. It resonates with the belief that the technological revolution is poised to unfold on a grander scale, with enduring impacts that will reshape industries and societies for the foreseeable future. The transformative potential of tech transcends physical boundaries, extending its reach into the virtual realm. The rise of the metaverse, an interconnected virtual space blending augmented and virtual reality, holds immense promise. This innovation could redefine everything from entertainment and social interaction to how we conceptualize workspaces. In essence, the sustainable growth perspective posits that the current tech trajectory is not just a fleeting moment, but a continuous journey into uncharted territories, guided by tech giants who are at the helm of a revolution set to indelibly shape the fabric of our world. For investors contemplating the intricate landscape, the question of navigation becomes paramount. In this complex equation, the timeless solution emerges: diversification. While the allure of tech stocks' profitability remains compelling, the quintessential strategy of maintaining a well-rounded portfolio assumes even greater significance, offering a shield against the inherent uncertainty of the market. By spreading investments across varied asset classes, industries, and sectors, investors can mitigate the potential impact of downturns that might adversely affect any single area. This prudent approach not only acknowledges the potential rewards of the tech sector, but also recognizes the importance of tempering risk, ultimately embodying a balanced and calculated maneuver amid the ebbs and flows of the investment terrain. As we wrap up our discussion on the rise of tech stocks, we find ourselves at a crossroads, pondering whether we're witnessing a bubble or a pathway to sustainable growth. The verdict remains uncertain, and only time will paint the full picture. Yet, amidst this debate, one constant holds true: technology, in all its forms, will continue to shape the world around us. We've enjoyed having you with us at Market Matters Media. To dive deeper into these market dynamics, don't forget to hit the subscribe button and ring the notification bell. Until our next rendezvous, keep a watchful eye on the markets and stay informed. Until next time, take care and farewell for now.